Should you pay off your student loans? Coming up. Hi everyone, this is Ernesto from AttaBoyCowBoy, and on this channel, we give you health and wealth tips to help you be more successful. Now, everybody wonders, what should I do with these student loans we get out of school? It's like a weight around your neck, you know, it drives you nuts. But as annoying as they are, don't pay them off. That's not your best strategy. I'm gonna explain why. A lot of times, when people get out of school, you're just looking at this big debt and you're saying, wow, I owe 50 grand, 100 grand. I had a friend that finished dental school. He owed 750,000. He was like, wow, man, I got this huge debt. But this is a problem. There's an opportunity cost. Remember, we're all gonna die. We have a limited amount of time. So if you graduate and let's say you're 25, you got about maybe 40 years, let's say, to retire, about 65, for example, right? You wanna start investing early so that money has time to grow, so you have more money later on, right? Because investing is like an inverse pyramid. You start off with a little and it compounds. So if you look at my video on compound interest, I explain a little bit more about that. But time is really important. So the worst thing you can do is get out of school, work really hard, get all your money to pay off student debt, and then start investing. A lot of us are taught that, wow, debt is terrible. Debt is not terrible. Debt is really good. I love debt. In fact, if you think about it, big companies like Apple, Google, Uber, etc., they have tons of debt. They love debt. They take on as much as they can. The reason why they want debt is because they take some debt and then they invest it in things that make much more than what they're paying on that interest on that debt. Even the US government does that. We own like $23 trillion or something like that. That's more than like a lot of countries' GDPs in the world. It's a huge amount. But we want that debt because we invest that debt. You know what I mean? We make money off it. We make a lot more money with the money they lend us. And I'm gonna give you an example. Let's say you owe $100,000 in student debt, right? And you pay that off and it takes you like 5 years. You know, I have friends that I've heard tons of stories. Like, oh, I pay all my money every month. And I'm thinking, it's like the worst thing to do, but okay. They pay all their money off. And then 5 years from now, they say, all right, now I have money. Now I'm gonna start looking for a house. Well, what have you been doing for those 5 years? You've been paying rent for $2,000 a month, which is $24,000 a year, $100,000 in 5 years, basically, right? More, it's like $120,000 approximately. That's not good. Paying all that rent is lost money. Instead of paying off your student loan, if you would have saved some money, because banks are cool with student loans. Student loans is considered good debt. They'll still lend you money if you have student loans, because they look at you and they say, okay, this person is responsible, they persevere. Remember, it's a subjective process. They say this person went to school, they're educated, they have more earning potential. The probability of you paying back is much higher, so they want to lend you money. So they'll kind of look aside, they'll ignore the student loan debt, and they'll still lend you money. Now you buy a house, and in those 5 years, you save that $120,000. You put that into your own house. Plus, your house probably appreciated. So in LA County, for example, where I live, the houses are appreciating at about 10 to 20% a year. We'll keep it simple. Let's say 10% a year on the low end. If you bought a $500,000 house, it's gonna go up compounded for 5 years. So in the first year, you're gonna make $50,000. That house went from 500 to 550. The next year it goes another 10%, which is 55,000. Because now you have 550, you understand? So it's compounding for 5 years. So at the end of 5 years, you're gonna make about another over $300,000 you made off that house appreciating. That's on the low end, on 10%. So tell me, is it worth it to pay that $100,000 student loan over 5 years? Of course not. Not only did you save that $120,000 you would have paid on rent, you put it into your house and you made over $300,000 on the house appreciating. So you made over $400,000 by just paying the minimum on your student loan leaving it there and investing your money. That's a really simple example, and I could explain that 100 different ways why you don't want to pay off your student loan debt. Now, if you're not paying your student loan debt to go out and buy consumer goods, consuming, like buying fancy sweaters or expensive shoes or, you know, a brand new car, then that is a really bad choice. You're better off paying off your student loan. You want to invest your money and take debt for things that are going to build wealth for you, things that are going to invest. Do not take on debt to consume. That's going to keep you poor and make you poorer for the rest of your life. So if you're holding off paying off your student loan to invest in startups or buy a house or buy rental property or whatever, or to fund your investment accounts like your IRA, your 401k, that's a really, really good thing to do. Do that. Do not pay off your student loan debt. But if you're going to take it out to spend it, forget it. Pay off your student loan debt. So again, thank you for listening. And if you have any questions, please comment below. Thank you.